Hey everyone, welcome to our latest Trade of Black podcast. I'm your host, Shadd Dales. Today we focus on micro cap stocks. Yes, we've listened to you. This is the feedback that we've received. So we're going to dive into companies with value between a $5 million market cap and $250 million with big upside potential. These aren't pump and dumps, proper research in place, real companies with big upside potential. Why are we doing this? We're doing this for you. And how are we going to do it? Well, let's welcome in lead financial writer and analyst at TDR, Bill McNarland. Good to see you, sir.
Yeah, great to be here. Really excited. We got a great show today. A lot of interesting companies.
Yes. Look, I know the Small Cap Sunday podcast, strong show to say the least. We look at companies valued between $250 million and $2 billion. A lot of the feedback that we got from a lot of our viewers right now, or a lot of these penny stocks that are valued below $100 million in market cap. So was it easy to find, I guess, some of these companies, or is it difficult to find? I guess the first thing.
It takes a lot of work, and there's not a lot of additional information that you can find about the company. So you have to do a lot of digging yourself. But
Yep.
it's good. It can be done. I went through it, and I found some interesting names to look at today.
Okay, so let's set the stage. What are the requirements for companies when you're looking at these specific companies that we're covering in this show? So that way we understand that do they have upside potential? Yes or no? Are these pump and dumps? We want to make sure whatever companies that we're covering are legit ones, especially when you're looking at companies with this small of a market cap.
Yeah, and how this show is going to be different than Small Cap Sunday is it's going to be higher return potential and higher risk. And we're going to acknowledge this. So a lot of these companies wouldn't qualify to be purchased on Small Cap Sunday. But
Yep.
on this show, we're going for higher returns. And so we're going to show how that's different from what we talk about on Small Cap Sunday.
Which I think our retail community will like. So let's jump into it. All views on the YOLO Tuesday podcast, the guests of this podcast are per the opinion. You should not treat any opinions expressed by us or our guests as investment advice. And the views on this podcast are solely intended to be informational and are not investment advice. Okay. You've set the stage as far as the requirements. So let's begin. And I think everyone's going to be happy based on the first category that we're going to cover. It's in the cannabis space. It's a SaaS platform that features over 7,800 brands in the cannabis space and 4,600 retailers. The company is called LFLY, which trades on a senior exchange, the NASDAQ, under the ticker symbol LFYL. Current market cap, $3.5 million. Bill, what's the revenue of this company and why is the market cap so low? Because the two don't add up.
Yeah, so this is really interesting. We've had viewers request that we look at this. The stock is down 99.2% over the last 5 years. So the
Wow.
question is this an amazing opportunity or is this a trap? So first of all, this company has real revenue. They have $40 million in the last 12 months of revenue. It's down a little bit in their revenue from the year before, but this is a real thriving company that has some issues that we'll look at and will help us determine whether it's something we'd want to purchase or if it's a trap.
So when you talk about issues, and I know you say you want to dive into that, what are some issues that come to mind?
Well, the first one is they have some debt coming up.
Yep.
So they have $35 million of debt that needs to be renewed in the next year. Now I'm gonna share two comments what I've learned about debt issues like this over time. The first one is if you borrow $100,000 from the bank and you can't pay them back, you have a problem. If you
Totally.
borrow $100 million from the bank and you can't pay them back, the bank has a problem.
Mm,
So in this case, they have the potential to negotiate with their debt holder. They're doing some of that successfully. They have a CEO now that was their former general counsel of the company. She's a lawyer. So this is good to have when you have debt negotiations going on. But this is the main problem that they have to consider as a company. And so because of that, they have a credit rating. When we look at it, that's not too good. It just pulled my notes here. Their credit score is minus 4.7.
yeah.
So debt is the issue.
Yeah. Okay. Let's jump to the charts. First up, what did the company that you said achieved last year when it came to revenue? It was 44 million or 40 million, did you say?
It was $40 million, and their growth was down a bit. Was down 15% over the last year.
Okay. Gross margin. This really grabbed my attention. 89%, which is huge.
Yeah, this is a real successful business in their niche. Now let's talk about their website. And I have a chart here that I pulled up. This is some of the digging I did. I went to a service that we use internally called SIMrush, where I can rate websites to learn about their traffic.
Yeah.
SIMrush predicts that they have about 5.3 million people coming to their website organically every month. That's huge.
Yeah.
So, I mentioned this to you earlier. How much would it cost to build a website with 4.3 million organic people coming to each month? It's much more than the market cap of the company. So this what they have here is really interesting, and they want to grow this through international expansion and by
Yeah.
also covering more stores. And I believe this thesis. When I went on it in my neighborhood, there's more cannabis stores than there are pizza joints. They're everywhere, but they don't list anyone in my neighborhood. It's I have to go about 20, 30 minutes away to see a listing. So there is room to grow here of companies, cannabis companies in the US and then also in other countries that don't have exposure to their website yet.
Yeah. Is there any near-term catalysts for this company outside of the, as we all well know, rescheduling potentially happening before the federal election this fall?
I think the two things that would cause this company to move is they announce that they've renegotiated their debt or came to a
Yep.
solution and
Yep.
additional cannabis news. If you
Yes.
see that, those two announcements, this stock I think could move significantly.
Well, I guess that's the most important question is are they going to be able to renegotiate their debt? Because I know a lot of the big MSOs that had these same types of questions, like the Air Wellnesses of the world, were able to do that. And like, especially with canopy growth as well, with no material debt due until the next couple of years. But that is going to be extremely crucial. But like you said, if it is, then this is a company that's heavily been shorted down 99, over 99%. But yeah, there's could be upside potential. So, moment of truth right now, current situation, is this a stock that you would own? Because let's all face it, in this retail community, we always find that what is the stock that we can buy that's on sale right now? But we need to proceed with caution. So, moment of truth, would you own this stock?
If you asked me on Small Cap Sunday, I would say no. It would be too high risk of a profile. On our show here, I would buy this, and for three reasons. One, the company is real. This has real revenue. It's significant. Secondly, this website is unbelievable. It's really hard to beat. Third, if I had a debt problem, I would want a company run by financial professionals. They
Good
have
point.
very talented people now working for the company that work in finance. And
Yep.
also, the CEO has the background of a lawyer, being a lawyer. I think this is a good combination that could give a potential high return. So I would buy this. This is a YOLO pick. You only live once.
Boom. All right. That's the big difference between Sunday and Tuesday's show. So that's our first check mark here tonight. So you would own Leafly Holdings. Again, trades on the NASDAQ under the ticker symbol LFLY. I'm sure some of the viewers out there that hold this stock will be happy to hear that. Next up, let's now jump to the mining industry, a uranium company called Global Atomic Corporation, which trades on the TSX under the ticker symbol GLO and on the OTC under the ticker symbol GLATF. Bill, tell me more about this company.
So we have requests for uranium and other metals that are taking off in price, and this
Yeah.
is a good opportunity to potentially have high returns mining. And so I picked a uranium company, and this was a great example for a teaching point of what we're going to look for in mining companies on the show. So this company, heavily involved in uranium development. They have the majority of the company's future is tied to an 80% interest in a uranium project in the country of Niger.
Okay. So before we get into that, I wanted to ask you brought up uranium as well. Like what's it trading at right now and how's it performed overall here in 2024?
Yeah, so uranium's waking up. It's around
Yeah.
$90 today. It's been in a range somewhere between 70 and $100 in the last little bit. It was subdued over the last decade. And so we have a
Okay.
chart here I'll show you that goes back to the year 2000. We'll put up on the screen here. You can see that it had a huge run up in 2007, and then it came back down, and then now it's waking up. So this is an interesting time to take a look at uranium stocks.
All right, let's look at that chart then, as you said.
Yeah. So you can see the huge run up in 2007, 2008, how subdued it was. And then you can see now how it's waking up again.
Got to ask you a question. When you look at this space and most importantly, mining companies, How do you break down or what to invest into a mining company, not to invest? Like, walk me through, I guess, the procedure on things that you look at and the requirements that you look at when like dipping your toe into this space. Like, what are key things to look for when trying to establish a mining company that's good versus not?
So this is a very clean company. It's very easy to understand. They essentially have this asset and an opportunity. They have a little other interest in another area, but this is the majority of the company. We want to look at a feasibility report. So this is a third party that does this for mining companies that are public. It's a there's requirements of how you present information publicly with mining companies.
Yep.
What the third party does is they go out and calculate how much is going to cost to put the mine together, what
Yep.
your expected production is, and how much money you're going to make after you pay taxes to the local government or to your own country as well. So I can break this down to make it really easy for us. All I would be saying to you is, hey, Shad, if you give me $1, I'm going to go to Africa and do this uranium mine. I think I can get you about $2.20 back in the next 4 or 5 years.
Right. And you got to decide
So
whether or not it's something you want to take a risk in, right?
absolutely. So another comment there. I've done some work as an analyst before, going to countries that are difficult to work in. So I did some
Yeah.
work in Pakistan. When 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 you're on projects like this, when you look at the feasibility report, there's usually always delays or challenges that aren't foreseen, that take
Hmm.
longer and costs run up. So when I look at this, their feasibility report, they're predicting that there's $917 million that could be made. And the market cap is larger we normally would look at on the show, but it was a good example. It's 421.
Wow.
So if this stock was trading at 100 million, maybe I'd say, oh, that's an opportunity. I can make 9 times my money. But making a little bit better than a double at the current uranium prices, this is an opportunity that I wouldn't be overly intrigued by just because of those metrics. That doesn't mean the company is there anything wrong with the company. It's
Yeah.
just the current price compared to the opportunity.
What's its current balance sheet?
Yeah. So when you look at their balance sheet, they have the mining project is expected to have a value of $917 million to be able to produce. That's the net present value. They have $18 million in cash plus this mine. So
Yeah.
in order to get that opportunity, you'd have to pay $421 million. So I just think there's a bit of a mismatch. It's when you look at the price what you'd have to buy compared to the upside.
How's the stock performed so far this year? Do you know?
It's down 20% for the year.
Okay. All
So
right.
and that's not uncommon outside of the extreme large caps. A lot of stocks are down right now, and you'll see that common theme on the shows that we have. But I'll keep this on my radar screen. Maybe if it fell more in price or their feasibility went up or the price of uranium went much higher, it may be then a name to revisit again.
All right. So stock that you would own, you would obviously say no at this point.
At this point, we'll keep it on our radar screen, but we're excited about looking at more mining. I think on each show, we'll likely have a mining opportunity to look at.
Yeah, good to know. All right, let's now switch to the crypto industry and a company called WonderFi Technologies. Actually, we used to work with them a couple years ago. A company that went on IPO'd actually on the New York Exchange back in August of 2021. Kevin O'Leary was and is a notable investor, along with Noel Biderman. And people may say, why does that name ring a bell? Well, he's the former CEO of Ashley Madison, and his name has gone maybe just a tad viral the last couple of weeks, considering if you've actually been on Netflix, your Netflix account, and the new Ashley Madison documentary. But that really opened up a lot of people's eyes. Bill, I won't ask you whether or not you have a profile or not, but I assume that you don't.
On
But
WonderFi or Ashley Madison?
all right. But anyway, this is a company started as a DeFi company. I think they were involved at one time with the sports betting industry in Ontario at one time. Not sure if they still are, but they now own and operate both Bitcoin or BitBuy, excuse me, and CoinSquare, which are two leading crypto platforms. So first up, why is this company interesting you? Sorry, excuse me.
It's a different demographic of people that are becoming interested in crypto right now.
Yeah.
It's more mature. People are starting to look. So in the old days, when people were buying crypto, they would buy it in unregulated marketplaces. And today, the more mature crowd or institutional crowd want to make sure that they're buying it through legal institutions that are approved by their local
100%.
securities commission. And this is what WonderFi is executing on. So, for example, BitBuy is fully regulated. So is CoinSquare. If you want to do some payments, Smart Pay is there. Then also their Tetra is custodian. So licensed cryptocurrency is the business that they're in. And I like this area because I see the trend of more mature people moving toward crypto and requiring this.
Well, let's face it. I think it serves right now 375,000 Canadian clients and buying and selling in 16 varieties of cryptocurrency, including Bitcoin, Ethereum, Solana, a blockchain platform, aka BitBuy. They're also expanding internationally into the Australian market as well, correct?
Yeah, and this is great. We saw the news about the ETFs coming to Australia and such. And so this is a global phenomenon. And so this is, I think there's some legs here for them for their growth for sure.
Yeah, WonderFi, they bought BitBuy for $206 million. So one can say too in this day and age in the crypto industry that it's best to buy the service provider instead of the coin. And that's been a clear example and a clear understanding for a lot of people in this space. And that's common knowledge. But would you agree with that sentiment?
Absolutely. I'm very interested in being a step away from it, servicing it. That's why I also look at the, some of the ETFs and the providers as well. But this is an interesting, real pure play that you can get a company that is almost completely focused on this one industry and as a service provider. I like this.
Yeah. All right. So let's go to the charts. How has the stock performed this year?
The stock has been down. Year to date, they're down 35%. So this is interesting because you look at how crypto prices have performed.
I know.
They have done better than the service provider.
Okay, so what was revenue for the last 12 months and what was the overall growth over the past year? Because I think they've
Yeah,
climbed and grown substantially.
yeah, they have. So $44 million. This is real revenue in the last 12 months, and 304% growth. So that is not
So
an
why is
upstart company by any means.
the stock down then? That's confusing when you
I
look
think
at
there's
the
a lot
growth.
of misunderstandings of pricing in general. I think people are just following the super large cap names currently.
Yeah. Okay, so near-term growth catalysts, obviously with Ethereum and their ETF being approved, what was it, last week or 2 weeks ago? Is there any near-term catalysts for the overall
I think
company?
I think they have the nice combination of the wind behind their sails from what's going on in the crypto market, but then secondly, specific to the company with the international growth.
Okay.
I love this idea when you find what's working in a country and then you start moving it to other countries that don't have those services and just replicating what you've learned from the original country.
Okay, what's the current gross margin for the company?
Yeah, it's 89%, so it's a very high gross margin. They still have, when we look at the leverage free cash flow and net income, it's still negative. They haven't come to profitability yet as a company, but they have time. When we run a credit check, it's
There it
3.1.
is. Yeah.
Yeah, so they have time to make this thesis work.
All right, moment of truth. Would you own this stock?
Yeah, I would. One, I love the idea of being the service provider, and also I like buying things that are on sale. So I think this is a good time to look at this company.
All right. So when looking at microcap companies and what a lot of retail investors like is what stocks to look at when they are on sale. So this particular example is one where you look that it is indeed on sale and a company that you like.
Yes, yeah, that's on our other shows we've clearly identified that a lot of times these things on sales are traps, but I
Totally.
don't think this is the case here.
All right. We got to come up with a theme where it's on sale. It's either safe or trap. So this is safe, correct?
Yes.
We can change that over time too. We don't necessarily have to go safe, but at least we avoid the trap. All right, 3 down, 1 to go. Final company here on YOLO Tuesday show. By the way, leave some comments below. What do you think so far of these companies that we basically covered? Is there any companies that you want us to cover? Leave comments below. You got any questions regarding any of the companies that we've covered so far here today? we'll reach out to Bill and he'll provide you with some feedback. But so far, this has been good. All right, last company we want to bring up here, as I said on YOLO Tuesday, company called Autoscope Technologies, which trades on the OTC under the ticker symbol AATC. First up, this is a global company dedicated to help improving safety and efficiencies for cities and highways. Sounds interesting, Bill. So can you maybe elaborate on what I mean by that?
Yeah, there was a number of things that caught my eye, but the first one was their scope. They have 150,000 installations in 80
Okay.
different countries. So
Okay.
cities and communities see the value of what they're doing. And what was also interesting as a technology company, they're putting AI in now and machine learning to be able to predict safer ways for communities to be put together and traffic patterns and how to protect pedestrians and cyclists. And so I thought this was a really intriguing description of a company and a business that they're in.
So walk me through, or to like drum it down. How do they monetize and basically create revenue off of what you've just outlined?
Yeah, so it's a service company. They're charging services for the use of their technologies in these installations.
Yeah.
Um, but they also are looking to grow their revenue and their business also by acquiring other companies in this space to help speed up or produce their future growth.
Do we have any idea how many countries or cities that their program is currently featured in?
Yeah, it's 80 different countries
80
that they're
different.
in, and
So it's massive.
150,000 installations. So it's a significant footprint they have globally.
AK, which is why this company interests you. Okay, let's go to the charts then. What was revenue like for this company last year?
So their revenue was $13 million last year. Their growth was a bit slower. It was at 3.6, and over the 3 years, their revenue has been flat. But when we dig deeper into their balance sheet, which we'll talk about in a moment, they have the capital to be able to go out and grow now, and so
Okay.
their growth behind their catalyst is to acquire other companies that are already established, and then to be able to enjoy the growth from these future companies.
All right. So how's the stock performed so far this year and what's it currently trading at?
Yeah, so for having a market cap of only $33 million, it wouldn't have the traditional share price and structure that most people would think of.
Yeah.
So, for example, the stock's trading at over $6, and outstanding shares is 4.7 million.
Oh, wow.
So it's not the typical what we would think of as a so-called penny stock, even though it has a market cap of only $33 million.
Hmm. Wonder what the daily volume is on this stock. But yeah, it'd probably be a tough stock to trade with only 4.7 million outstanding shares, but currently trading at just over $6, you said?
Yeah, and there is volume there. It was enough that I'd be able to purchase as a retail investor without issue.
Okay. Any near-term growth catalysts that grabbed your attention for this specific company?
Yeah, so it's going to be the purchase of the future companies, and they have the strength that they can be able to do this. They have positive income from their business.
Yeah.
They also have great margins, which will go through, and they have very strong credit. So it's buying an additional business is where they're going to get it from, and getting paid a dividend while we wait.
Yeah. Well, something I was just going to ask that. Do they provide a dividend? That's a question you don't ask
Yes.
too often in the microcap space, right?
Yeah, so it's 8.5%,
Wow.
including the special dividends that they pay, but it's been fairly consistent, and the dividend growth has been 8.3. So this is, we can see, even though they have this market cap of $33 million, it doesn't really sound like a traditional microcap stock.
Okay. Let's focus on levered free cash flow and net income. What'd you find?
Yeah, so it's positive. Last year they had positive leverage free cash flow of 4.3 million, very similar to their net income of 4.5. So because of all these things lining up for them and their strong balance sheet, when we took a look at the credit check, it came out at 12.4.
Wow, that's
So
strong.
yeah, this is a very strong company, and you can see the thesis that with credit like that, they'll have no problem going out to purchase another company to be able to increase the revenue.
80 countries and 150 cities, and they look to acquire smaller players out. So, moment of truth, is this a stock that you would own?
Absolutely, I just love going into AI and machine learning type companies that that you can buy inexpensively and
I
that
know.
have a thesis for growth. And I'm not worried about their credit or getting into problems. And this is a rare one that you're actually getting a dividend while you're waiting for potential
AI
increase in price.
A AI is an attractive industry. There are a lot of great companies with fat margins out there. How also there's some nightmares too when trying to program a lot of this stuff. Like, is there anything that you watch for similar to the mining industry, but is there things that you kind of tread lightly when looking at specific companies in the AI space? If so, like what is it?
It's being just further in the development curve. So
Okay.
there's, when you come up, the three stages of a business is, first of all, it's very easy to come up with an idea. The second challenge is getting it financed. But the
Yeah.
third challenge, which is the hardest, is the execution on the thesis. And so
Right.
it's nice to see companies that are already earning revenue from their thesis, because that really de-risks the execution stage of the business.
Yeah. All right. Again, company's called Autoscope Technology, trades on the OTC under the ticker symbol AATC. Quite arguably, maybe the most favorite or most popular company, I think, when you look under the hood out of the four companies here today. All right. What'd you all think? That was our first show, YOLO Tuesday, looking at the micro cap stock landscape. These are companies with big upside potential. But as usual, as I said off the top, we want to make sure we do the proper research, that we're not just giving you names that are pump and dumps. These are real companies, good or bad, as to why you should, I should say, proceed slowly but surely, meaning like, is it safe or is it a trap? But I hope you basically appreciated the outline that we outlined for a lot of these companies or the four companies here today. And if so, leave some comments below. Let us know if you have any questions. And as usual, we will look at suggestions that you guys want us to look at as well every Tuesday, 4 o'clock, YOLO Tuesday. I thought the first show was good, but most importantly, I think, Bill, that I think we're going to highlight some really good companies with some big upside potential here. But I think the retail community is going to love this.
Yeah, it's exciting to do, and I'm really excited that we come up with the show concept.
Yeah, and if you haven't done so already, to our viewers out there, make sure to check out the Small Cap Sunday show. We had some good four companies that we outlined. That's at 8 o'clock Sunday nights as well. So lots of stocks. And if you haven't done so already, make sure to log on to our dalesreport.com, subscribe to the Baked In newsletter. We've got lots of research reports we're doing as well, and a deep inside look at all these micro cap and small cap stocks that basically we're covering, and whether or not we think, if it is on sale, is it smart to invest and buy right now or not? Not investment advice. We're just giving you information on what we like and what we don't like. So if you want to learn more about that, then subscribe to the Baked In newsletter and learn more by logging on to the dalesreport.com. Bill, appreciate you checking in here today. Enjoy the rest of your afternoon, and we'll see you later this week, okay?
Take care.
Hey, everyone. Thanks again for watching. Hey, we're humming along, and it's all because of you and the audience and community that we're building. So, again, make sure to smash on that like button and leave lots of comments. Who do we have up next? You let us know. Who should we interview? What companies? Is there anything you like? Is there anything we're missing? We're all here for you. Let's get on with each other and build this community for all of us to benefit. As usual, don't forget to subscribe to our channel, because in the end, we wouldn't be here without you. Thanks again, everyone.